there, Maverick Traders. This is Rob Reinhold. It is the second day of November, and we had a continuation of the rally, so let's go ahead and check everything out. In this session, we're going to check out what today's day was all about, what was in the news, and again, like I said, we had an up day. The big question is, did we have a change in our score? Because we have been bearish really since about September 1st, and we've been saying we think the market's going to bottom, but did we actually bottom? We're going to go through the technical scoring system and see if we can actually go more bullish now than we have been over the past 2 months. And then, of course, we're always looking for setup, so I'm going to have a couple of trades here. I got 2 bulls and 1 bear for you in this video.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So let's look at the numbers here. We've got the Dow up 1.7, S&P up 1.9, Qs up 1.8. As you can see, the Russell is playing catch-up. It's been the worst equity market so far this year for sure. I got those switched up. Oil was actually up 2.6%, gold only up 0.27%. So again, this was just a really, really bullish day. And if we take a look at the news, that happened today, this really was just a continuation of the rally that we've seen all this week, and then a continuation of what we saw after the FOMC meeting yesterday. The big news was the bond yields fell substantially. We're now back down to 4.6%. The stock market loves that. And you can see this was a very, very green day today. 4 out of 5 stocks were higher. We were up to about 84% of stocks under the 50 MA. We've creeping our way back up. So as you can see here, things are starting to look better on the internals. The big question is, did we make any sort of change in the technicals? And if we come here to the charts, the first thing I want to check is, okay, are we above the 20? Okay, we are above the 20-period moving average. That is showing me, okay, but look, we did it over here as well. We need to see this go above the 50-period moving average and then probably pull back and hold it before we can get overly bullish. So at this point, we are above the 20, below the 50, and stuck in the middle. Both of these are starting to flatten out. This is a big old fat 0. Now look, 0 doesn't mean the market is sideways. It is simply a measure of where we are going. We had been at a -2, -3 for the last 2 to 3 months. At one point, we popped up to a -1 up here, and you can see we fell right back down. Look, 0 can simply just be a stopping point along the way from going from -3 to +3. Or we could be -3 to 0 back to -3, just like we were last month. Until we break above the 50-period moving average and then hold it, as much as I want to say I'm bullish, and look, I am very bullish, I feel bullish, but I cannot make my portfolio bullish until I get the confirmation. Now, I want to go back to where I was about 2 or 3 weeks ago. You heard me say, I'm bullish, but I can't go bullish yet until the technicals tell me to. I have to stay bearish. And guess what? I made money during a period where I was flat out wrong. Why? Because my trades matched the market, not my opinion. I'm in the same place over here. I'm bullish. I think the market is going to move higher. But I also thought that 2 to 3 weeks ago, and I was wrong. So I'm not going to change my trades until I get a confirmation from the technicals. We need to break above the 50-period moving average, do a retracement, hold it, and then move higher. If we take a look back into August, we broke above the 50, came back, did not hold it, and fell right back down. We have 3-4 weeks to go until I can come out and say, yes, the technicals say this is a bullish market. So until then, you really are going to be stuck in this 0, -1, +1 area for a long time. Here's the 10-year bond yields backing off. But you can see technically they haven't broken. We're still in a bullish market on bond yields. So look, it's too early to technically say that that was a bottom. Do I think that was a bottom? Yes. Guess what? I thought it was the bottom 3 weeks ago, and I was wrong. We have to wait for the technicals to tell us it's time to go. Here's the heat map, a bunch of green. There's really not much to talk about. This was just a very, very broad rally. So the question is, okay, where were we at the start of the week? We were at a -3. As you can see, we've come all the way back up to basically, I'm going to put it a little bit below a zero, like a -0.5. We haven't yet gone above the 50, which is my target of saying, okay, now I can be net bullish. Till that happens, I have to stay neutral or net bearish, period. Again, I do not trade my opinion anymore. I trade the charts. The charts are not telling me to have a net bullish delta in my options trades yet. Let's go in and take a look at a couple trades. Now look, I've got more bulls than bears, but look, that doesn't say you can go swing for the fences yet. It is way too early. You could have done the same thing 2.5 weeks ago and been absolutely slaughtered if you got too bullish. There's plenty of time for us to get bullish once the market proves to us it's going to be bullish. First up in the oil sector, this is Frontline. This has been on my list for a long time. This stock just keeps cranking higher. I know these are hard positions to take when they look overextended, when they haven't pulled back at all. Sometimes you just got to get into them. We have a saying in Maverick, sometimes you got to hold your nose and buy. You got to plug your nose and buy because they stink. This is one of those. And here's the great thing. We don't have to buy aggressively. We can do something like a diagonal call spread. It's like a 23, like a 20-23 or 21-23 diagonal call spread. Works just fine. We don't have to get super bullish. We can be mildly bullish. We go on to the next bull. This one, look, it's the gap. I don't care about the gap. I think their lows stink. But look, some people like them. Fashion is in the eye of the beholder. But who cares? This chart. I mean, look what this chart has been doing. The whole time the market has been going down, this thing's been going up and is breaking out to new highs. This thing's ready to go. I got 14 as a short-term target. I'm going to be looking at a 12-14 diagonal call spread on this one. Let this thing run up to 14. Let me collect my premium, and I will move on to the next one. On the short side, I put together a search where I said, okay, give me the stocks that have been the weakest over the past quarter, but the strongest over the past week. Specifically looking for bear rallies. I want to find bear rally patterns. So here we have a stock, got all the way down to 38, and it bounced up to 50. Okay, on a rate of return, that's like a 29-31% bounce in a matter of 3 or 4 days. If this is going to continue going down, this is a great entry. It's a great entry here. Wait for that confirmation candle tomorrow, but a red candle tomorrow. I think you can enter this. I'm not going to be super aggressive because I don't want to be super bearish here. So I'll do something like a 44, 46 bear call spread. Again, I'm not saying it's going to go all the way back down below 40. I think it's just going to hang out in here. I just want to get a little bearishness here on this one, and that's it. Let's talk about tomorrow. We cannot get ultra bullish. So look, if you're like getting all jazzed because you've been waiting for this move and it's finally here, guess what? We had the same move 2.5 weeks ago. If you jumped onto that, you got crushed. So this is the same thing. I think this has legs. I will be surprised if it turns over. But look, I said the same thing 2.5 weeks ago, and I was surprised when it turned over. So at Maverick, we trade the market in front of us, not the market we want it to be or the think it should be or our delusion. We trade the market in front of us. We cannot get bullish until we are above that 50 MA and holding it. Tomorrow, we do have the payrolls report. It's not that important anymore because we just heard from the Fed. So the Fed already had this number. Look, there's still going to be a movement tomorrow, but I don't think it's going to be all that big. We do have Apple after the bell. I have not checked the report, so let's check it right now together. All right, here's a post-market quote on Apple. It's down to 175, so that's down about $3. So look, Apple's falling, so we do probably get a red candle tomorrow. Apple's a big stock. We probably get a red candle tomorrow if it stays lower. So like I said, don't jump to the bullish side yet. It might be there in a week or two, but it's not there yet. But Do you want to be really bearish right now? No. You want to be somewhere in between, waiting for some more confirmation. That is the market roundup. Thanks for joining me. Goodbye, everybody.